There's a moment that comes for every trader, usually around 3 in the morning, when the adrenaline has worn off and the silence of the empty room starts pressing against your chest like a physical weight, and you're staring at your trading journal or your brokerage statement or sometimes just the ceiling, and you're asking yourself a question that has no comfortable answer. Why do I keep doing this to myself? Not the trading itself, but the pattern, the cycle, the thing you know you're doing wrong but can't seem to stop, like watching yourself make the same mistake in slow motion over and over, as if you're trapped in some psychological maze where every exit just leads back to the entrance. You know what I'm talking about because you've been there, maybe last week, maybe yesterday, maybe you're there right now reading this, because some part of you recognizes that the problem isn't your indicators or your broker or the market makers or any of the external things you've been blaming, but something deeper, something in the architecture of how you think about winning itself. And here's the thing that nobody tells you when you start trading, the thing that takes years to understand and even longer to accept. The mindset that makes you want to become a great trader is often the exact same mindset that will prevent you from ever becoming one. Let me tell you about two traders, both real, both started around the same time, both had access to the same information, the same markets, the same opportunities. The first trader, let's call him Marcus, was brilliant in the way that gets you noticed, the kind of guy who could spot a pattern 3 candles before anyone else, who had that intuitive feel for momentum, who could take a small account and run it up 40% in a month when everything clicked. People talked about Marcus. They shared screenshots of his wins. He'd post these detailed breakdowns of his hero trades, the ones where he saw something nobody else saw, went big when others were cautious, and walked away with gains that looked like they belonged in a movie. Marcus was the trader everyone wanted to be. The second trader, let's call her Sarah, was boring in every possible way. She traded the same setups every day, rarely deviated from her plan, sized her positions based on a formula she'd written down and never changed, and most days she'd finish slightly green or slightly red by amounts so small they seemed almost insulting given the hours she put in. Nobody talked about Sarah. She didn't post screenshots because there was nothing worth posting. Her equity curve looked like a gradual slope upward, so smooth it could put you to sleep, while Marcus's looked like a heart rate monitor during a panic attack, massive peaks and valleys, drama on every time frame. Fast forward 3 years, and Marcus is out of the game, not because he blew up in one spectacular failure, but because he bled out slowly through 1,000 cuts, each one delivered by the same pattern. Make some money with heroic trades, give it back trying to recreate that feeling. Make some more, give it back faster, until the account was too small to generate the kind of wins that felt meaningful anymore. And once trading stopped feeling heroic, it stopped feeling worth doing at all. Sarah, meanwhile, is running a 7-figure account, trading the same boring setups, compounding those small wins with the emotional investment of someone filing paperwork, and here's what haunts Marcus late at night when he thinks about it. Here's what makes it unbearable. Sarah isn't smarter than him, isn't more talented, didn't have better opportunities or bigger starting capital. She just had a different relationship with what winning meant. The dangerous mindset, the one that keeps traders stuck forever, isn't about risk-taking or aggression or confidence, all the things that sound like problems but can actually be assets if channeled correctly. The dangerous mindset is this: believing that great trading is supposed to feel great, that wins should be memorable, that if you're doing it right, there should be stories to tell, moments where you were tested and proved yourself, where you saw what others missed and got rewarded for your superior insight. This mindset is dangerous because it's not obviously wrong. In fact, it's how excellence works in almost every other domain you've experienced, which is why it seduces smart people, disciplined people, people who've succeeded at other things by being exceptional. But trading isn't like other things, and the failure to understand this difference, to really internalize it at a level deeper than intellectual acknowledgement, is what creates that 3 in the morning moment of existential confusion, because you're doing everything that worked before, everything that made you successful in other areas of life, and it's destroying you here. Think about fitness for a moment, because the parallel is instructive. If you want to get dramatically stronger or leaner or more athletic, the path is clear. You push yourself, you find your limits and exceed them. You embrace the pain of the workout because that pain is the signal that you're growing. You track the big milestones, the new personal record, the weight you couldn't lift last month that you can lift now, the visible changes in the mirror. The story of fitness transformation is inherently heroic. It's you versus your previous limitations. It's suffering and transcendence. And this narrative structure works because in fitness, progress is linear enough and the feedback loops are short enough that heroic effort reliably produces heroic results. You can feel the connection between what you do and what you get. Now think about building a business, and you'll see the same pattern. The entrepreneur who grinds, who makes the big bet, who pivots at the crucial moment, who sees the opportunity that others missed, who risks everything and comes out vindicated. We celebrate these stories. We build entire industries around teaching people to think this way, to be bold, to trust their vision, to go big or go home. And sometimes it works spectacularly, which is why the narrative persists, why we can all name the heroes, the Musks and the Bezos figures who bet everything on their insight and won. But here's what we don't talk about enough. Here's the shadow side of heroic narrative. For every person who succeeded this way, there are thousands who failed identically, who made the same bold moves with the same confidence and the same work ethic and got destroyed. Not because they did anything wrong according to the heroic framework, but because that framework fundamentally misunderstands how probability works. In fitness, if you do the work, you get the results, period, because the human body responds to stimuli in predictable ways. In business, if you do the work and have insight and some luck, you might get enormous results, but you might also get nothing, and the difference often isn't about how hard you tried or how smart you were. It's about factors you couldn't control or even perceive. And in trading, this problem is even more extreme because trading is almost purely probabilistic, almost purely about edges that express themselves over hundreds or thousands of trials, not in any single instance, which means the heroic mindset doesn't just fail to help you, it actively destroys you by making you seek meaning in randomness and build your identity around outcomes that teach you nothing. The hidden cost of heroic thinking in trading shows up in ways that are hard to see until you know what to look for, and by then you've usually paid the tuition several times over. It shows up in how you size your positions, because if wins need to be memorable to count, you'll unconsciously size up on the trades that feel special, the ones where you have conviction, the ones where the story is good, and you'll size down or skip the ones that feel mundane, even if the mundane ones have better statistical edges. It shows up in how you handle drawdowns, because if you see yourself as the hero of your trading story, then a drawdown isn't just a statistical inevitability, it's a challenge to your identity, a test you need to overcome by trading your way out, which leads to revenge trading, tilt, and all the psychological spirals that turn normal drawdown into a contending catastrophe. It shows up in how you learn from your trades because you'll remember and analyze the big wins and the big losses, the dramatic moments, while the boring winners and small losers, the ones that actually constitute most of your edge, if you have one, blur together into forgettable noise. Let's talk about dating and relationships for a second, because the pattern repeats here in ways that make it crystal clear. Think about the person who's addicted to the chase, to the intensity of new romance, to the butterflies and the drama and the uncertainty. They meet someone, there's that initial spark, everything feels significant and alive, they're texting constantly, every interaction charged with meaning, and it's intoxicating precisely because it's unpredictable, because they don't know how it will turn out, because their ego is invested in winning this particular person over. And then, if it works, if they get into a relationship, something shifts. The intensity fades. The interactions become routine. The person is no longer a mystery to solve, but a known quantity, and suddenly it's boring, and boring feels like failure, like something must be wrong. Because isn't love supposed to feel like those first 3 months forever? So they leave, or they sabotage it, or they just check out emotionally while staying physically present, and they go looking for the next spark, the next person who can make them feel that aliveness again. And here's the tragedy. They never learn what comes after intensity. They never experience the deeper satisfaction of building something stable, of compound Intimacy of the quiet confidence that comes from choosing someone every day, not because you're chasing a feeling, but because you've built a life together that works. They're addicted to variance, to the emotional volatility, and they mistake that addiction for knowing what they want. Now map that exact psychology onto trading, and you'll see the problem immediately. The trader who needs big wins, who needs the excitement of being right when others are wrong, who needs trades that feel meaningful and generate stories worth telling, is running the same doomed pattern. They'll take the setup that gives them that hit of significance, the one where they have a strong opinion, where they can see themselves being proven right in some validating way, and they'll skip or minimize the mechanical setups that feel too obvious, too boring, too small to matter. And just like the person addicted to romantic intensity never builds a lasting relationship, the trader addicted to significant wins never builds lasting equity. Because edge in trading doesn't come from the trades that feel special, it comes from the ones you can execute hundreds of times without your ego getting involved. And those trades, by definition, cannot feel heroic because heroism requires stakes, requires the possibility of being uniquely right or uniquely wrong, requires variance. The behavioral economics here are absolutely crucial to understand because they explain why this pattern is so hard to break even when you intellectually know better. Kahneman and Tversky showed us that humans are loss averse at about a to ratio, meaning the pain of losing $100 is roughly twice as psychologically intense as the pleasure of winning $100, and this asymmetry warps everything about how we perceive trading outcomes. A day where you make 5 small wins and 1 medium loss feels worse than neutral, even if you're net positive. Because that one loss hurts more than all the wins feel. Good, which creates an unconscious pressure to either avoid losses entirely, which is impossible and leads to freezing on good setups, or make wins big enough that they overpower the loss pain, which leads to oversizing and revenge trading. Nassim Taleb's work on anti-fragility adds another layer. Systems that are anti-fragile get stronger from volatility and stress, but only if they have redundancy, only if no single event can kill them, which in trading terms means you need position sizing that ensures you survive any reasonable string of losses, but the heroic mindset rejects this because it feels like playing not to lose rather than playing to win, and we're taught that playing not to lose is cowardice, is settling, is what mediocre people do. Survivorship bias completes the trap because when you look at famous traders, when you read the books and watch the interviews and study the legends, you're only seeing the people for whom aggressive, intuitive, high conviction trading worked, the ones who went big and were right enough times to survive and thrive. You're not seeing the vastly larger population of people who traded exactly the same way and blew up because they're not giving interviews or writing books. They're back at regular jobs trying to forget the money they lost. So, you think the hero path is the path because those are the only maps you can find, not realizing that you're looking at a filtered sample that tells you almost nothing about what actually works, only about what worked for the tiny fraction of people who got lucky enough in addition to being skilled enough to end up visible. And your brain, which evolved to learn from stories and examples rather than statistics, absorbs these hero narratives and builds your self-image around them. So when you sit down to trade, you're not actually trying to make money. Not really, you're trying to become the person in the story, which is a completely different objective with completely different behaviors. Here's what actually matters in trading. Here's the thing that Sarah understood and Marcus didn't. Trading is not about the trades, it's about the system. And the system is not about finding amazing opportunities, it's about having a reliable way to express a statistical edge over enough trials that randomness averages out. Think about a casino for a second. The casino doesn't win because it makes brilliant predictions about what any individual gambler will do. It doesn't have a view on whether red or black will hit next. It wins because it has a tiny edge, sometimes just a few percentage points, that it expresses over millions of spins, and the law of large numbers ensures that this edge converts to profit given enough time and enough trials. The casino never goes on tilt. It never sizes up because it has a feeling. It never skips its edge because the edge feels boring that day. It just runs the system again and again and again with complete emotional detachment from any individual outcome, and the money flows in one direction with mathematical inevitability. You are not the gambler in this metaphor, or at least you shouldn't be. You should be the casino. But becoming the casino requires a complete inversion of how you think about winning. It requires you to stop asking whether this trade will work and start asking whether your system has an edge. It requires you to stop caring about being right on any particular trade and start caring about whether you're executing your process correctly. It requires you to feel exactly the same way about a winning trade and a losing trade, because if you executed your rules properly, both outcomes are just data points in the larger distribution, neither one more meaningful than the other. And this is where most traders fail, not because they can't find edges or can't learn to read charts or can't manage risk in theory, but because they cannot tolerate the emotional flatness of correct trading, because correct trading feels like nothing, and they came here to feel something. Let's get practical for a moment, because philosophy without application is just entertainment. If you want to escape the heroic mindset trap, you need to build systems that remove your ego from the equation, that make good trading feel mechanical rather than meaningful. Start with this. Write down your edge. Not what you think might work or what you're testing or what looks promising, but what you can specifically define, what you can backtest, what has clear entry criteria and exit criteria and risk parameters. If you can't write it down in a way that someone else could execute it identically, you don't have an edge, you have a vibe, and vibes are what gamblers trade on. Once you have it written down, the next step is position sizing, and this is where most people reveal they're still thinking heroically. Your position size should be a function of your account size, your risk tolerance, and the distance to your stop loss period. It should never, ever be a function of how good you feel about the trade, how much conviction you have, how perfect the setup looks, because those feelings are not predictive. They're just your ego trying to make the trade mean something. Build a rule that says you risk the same percentage on every trade, something small enough that 10 losses in a row, which will happen eventually if you trade long enough, doesn't cut your account by more than you can psychologically handle. For most people, this means risking somewhere between 0.5% and 1% per trade, which feels insultingly small when you're looking at a setup you love, and that feeling, that sense that small sizing is leaving money on the table, is your heroic mindset trying to sabotage you. Ignore it. The math is clear. A trader who risks 1% per trade can survive 100 consecutive losses before blowing up, which effectively means they're immortal in probabilistic terms if their edge is real, while a trader who risks 10% per trade is broke after 10 losses, which is not unlikely, it's inevitable. The small-sizing trader is anti-fragile. The large-sizing trader is a lit fuse. Next, create a filter for when you trade, because one of the sneaky ways heroic thinking destroys you is by making you find reasons to take trades that don't meet your criteria, usually because you're bored or you want action or you feel like you should be doing something. Your filter should be a checklist, and every item on that checklist should be objective enough that you can't argue with yourself about it. The setup is there or it isn't. The risk toward meets your minimum or it doesn't. The market context supports this type of trade or it doesn't. And if any item on the checklist is a no, you don't trade, not because you're being rigid or uncreative, but because you're being professional, because professionals follow their rules especially when they don't feel like it. Here's a framework for evaluating your trades that shifts focus away from outcomes and toward process. At the end of each day, don't ask how much you made or lost, ask how many of your trades followed your rules. Give yourself a grade based on execution, not results. A losing trade where you followed your plan perfectly is an A. A winning trade where you broke your rules is an F. Keep a log of these grades over time, and you'll start to notice something interesting. Your equity curve correlates much more strongly with your execution grades than with how confident you felt or how much conviction you had. The trades where you were certain, where it felt obvious, where you went big because you just knew, those are scattered randomly between wins and losses. But the trades where you mechanically followed your system, those cluster toward profitability over time, not because everyone wins, but because the system has an edge and you're actually expressing it rather than overriding it with intuition. Let's talk about pattern recognition for a second, because this is where a lot of smart people trap themselves. Humans are pattern recognition machines. We evolved to see faces in clouds and threats in shadows because false positives were safer than false negatives when a rustle in the grass might be a predator. This same machinery makes us phenomenal at spotting patterns in charts, sometimes real patterns that represent genuine edges, but just as often fake patterns, random sequences that look meaningful but aren't, that won't repeat because they were never real in the first place. The heroic trader trusts these pattern recognitions implicitly, especially when they're backed by conviction, by that feeling of knowing. The professional trader tests them, backtests them, forward tests them in small size, collects data over dozens or hundreds of instances, and only then, only after the statistics support it, incorporates them into the system. One approach feels intuitive and alive. The other feels bureaucratic and dead. One destroys accounts. The other builds wealth. Drawdowns are the ultimate test of whether you've internalized this shift, because drawdowns are where heroic thinking looks most appealing and is most dangerous. You're down, maybe down significantly, and every instinct you have is screaming at you to do something, to make a big trade that gets you back to even, to prove that the drawdown was a fluke and you're still good at this. This is your ego feeling wounded and demanding vindication. But here's the thing about drawdowns. If you have an edge, if your system actually works, drawdowns are just statistical inevitability. They're the price of doing business. They mean nothing about your skill or your future results. They're just variance expressing itself in a way that hurts. The correct response to a drawdown is to keep executing your system with exactly the same rules and exactly the same size, trusting that the edge will reassert itself over time, because that's what edges do. The heroic response is to either quit in despair or double down in defiance, and both responses come from the same place, believing that trading outcomes are supposed to reflect your quality as a trader on a short time frame, which they aren't, which they can't, because randomness doesn't care about your narrative. Think about writing for a moment, because the parallel clarifies something important. If you want to be a great writer, you can't sit around waiting for inspiration to strike, waiting for the muse, waiting for that feeling of flow where the words pour out effortlessly and you know you're creating something brilliant. Sometimes that happens, and when it does, it's wonderful, but if that's the only time you write, you'll write 5,000 words a year, and most of them won't be as good as you think they are in the moment. Professional writers write every day, same time, same place, whether they feel like it or not, whether the words are good or not, because they understand that quality comes from volume, from showing up, from the compound effect of doing the thing over and over until you develop real skill. The feeling of inspiration is a nice bonus, but it's not the point, and it's definitely not a requirement. Trading works the same way. If you only trade when you have conviction, when it feels right, when you're inspired by the setup, you'll take maybe one trade a week, and you'll have no idea if your edge is real because your sample size is laughably small. But if you trade your system every time it sets up mechanically without regard for how you feel about it, you'll take 50 or 100 or 200 trades in the same time frame, and that sample size will actually tell you something. The identity shift required here is profound and uncomfortable because it means giving up a version of yourself that you probably like, the person who has insights, who can read markets, who makes calls that prove prescient. It means accepting that you're not the protagonist of a trading movie, you're a technician running a system, and the best possible outcome is that your work becomes so routine it's boring, because boring means you've removed the psychological volatility that kills accounts. This shift feels like diminishment at first, like you're settling for being ordinary when you could be extraordinary, but that feeling is the lie. That's the heroic mindset's last attempt to pull you back. The truth is exactly the opposite. The traders who get rich, who compound wealth over years and decades, who actually achieve the financial freedom that probably brought you to trading in the first place, are the ones who figured out how to be boring, how to execute the same edges in the same ways with the same discipline while everyone around them is chasing glory and bleeding money. You have to understand that the market does not care about your story. It doesn't care if you need this trade to work because you lost on the last three. It doesn't care if you've done tons of analysis and you're certain about the direction. It doesn't care if this is your last chance to prove you can do this before your wife leaves or your savings run out or you have to admit to yourself that you failed. The market is just billions of dollars sloshing around according to the aggregate decisions of millions of participants, most of whom are also confused, also emotional, also wrong most of the time. The only thing that matters is whether you have a statistical edge in identifying moments where the probability distribution is slightly tilted in your favor, and whether you can execute that edge consistently enough and with appropriate sizing that the edge compounds into meaningful money. Everything else, all the narrative, all the meaning making, all the identity stuff, is just noise that prevents you from doing the simple thing that works. Here's what I want you to try, and I know it will feel ridiculous at first, but try it anyway. For 1 week, grade every single trade you take not on whether it made money, but on whether you followed your rules. Keep a spreadsheet. Column 1 is the trade. Column 2 is whether it met your entry criteria. Column 3 is whether you sized it according to your formula. Column 4 is whether you exited according to your plan, not based on hope or fear. Column 5 is your grade, A through F, based purely on execution. Don't even look at your P and L for that week. At the end of the week, calculate your average grade. If it's below A, B, you don't have a discipline problem or a system problem. You have an identity problem. You're still trying to be the hero instead of the casino, and no amount of technical knowledge or chart reading skill will save you until you fix that. Then, and only then, look at your P and L and compare it to your execution grades over those 5 days. You'll probably find that your best graded days aren't necessarily your most profitable days because variance, but over time, over weeks and months, you'll find that periods of high grade execution correspond to upward equity curves and periods of low grade execution correspond to drawdowns. And this correlation is the only thing in trading you can actually control. You can't control whether any individual trade wins. You can't control whether the market respects your analysis. You can't control whether you hit a string of losers that statistically shouldn't happen, but does anyway because statistics. You can only control whether you execute your process, and ironically, the moment you stop caring about controlling outcomes and start caring only about controlling process, the outcomes start taking care of themselves. The philosophical climax here, the thing that makes this all worth it, is the realization that you don't have to be special to win at trading, you just have to be consistent, and consistency is available to anyone willing to give up the drug of significance. The traders who wash out are often the talented ones, the ones with intuition and intelligence and passion, because those qualities make them believe they should be exceptional, and that belief makes them trade in ways that are emotionally satisfying but statistically suicidal. The traders who make it are often the boring ones, the ones who aren't trying to prove anything, who treat trading like a job, who show up and run their system and collect their edge and go home day after day, year after year, compounding not just money, but also the psychological capital that comes from knowing you can trust yourself to do the simple thing even when it's not exciting. This is the shift from gambler to professional, and it's not about risk tolerance or technical skill. It's about what you need trading to give you. The gambler needs validation, needs the high, needs to feel smart or brave or vindicated. The professional needs only for the system to express its edge over time, which requires nothing heroic, nothing dramatic, just the willingness to be boringly consistent in a world that celebrates exciting volatility. And here's the beautiful irony. Once you make this shift, once you genuinely stop needing the wins to mean something, trading becomes vastly more profitable and vastly less stressful because you're no longer fighting yourself on every decision, no longer recovering from tilt, no longer revenge trading or oversizing or any of the other ways that ego bleeds accounts. You're just running a system that has an edge, and the money accumulates the way interest accumulates in a savings account, not because any single day is impressive, but because the compound effect of a small edge expressed over thousands of trials is mathematically devastating in your favor. So, when you're sitting there at 3 in the morning, staring at the ceiling, asking yourself why you keep doing this, understand that the question itself reveals the problem. You're doing it because some part of you still believes that trading is supposed to be a heroic journey, that wins should feel significant, that you should be able to tell stories about your brilliant calls and your gutsy moves. And as long as you believe that you'll keep sabotaging yourself, keep taking the trades that feel meaningful instead of the trades that are mechanical, keep sizing based on conviction instead of mathematics, keep learning the same lessons over and over without ever really changing. But if you can let that story go, if you can accept that the path to trading success is paved with boredom and repetition and trades so unremarkable you forget them 5 minutes later, then everything changes, not because you've learned some secret strategy or discovered some hidden edge, but because you've finally stopped fighting the only battle that actually matters, the one between who you want to be and who you need to be to win this game. The traders who succeed long term aren't the ones with the best instincts or the most talent or the biggest wins in their highlight reel. They're the ones who figured out how to make trading feel like nothing, how to execute their edge without their ego getting involved, how to treat a $10 dollar when the same as a $10 dollar loss, because both are just outcomes within the expected distribution of their system. They're the ones who chose consistency over heroics, process over results, long-term compounding over short-term validation. They're the ones who realized that the dangerous mindset, the one that keeps traders stuck forever, is the belief that great trading should feel great, and they killed that belief before it killed their account. They became the casino, and the money, over time, inevitably followed.